This is Scott Becker with the Becker Business Minute, the Becker Private Equity Podcast. One of the fascinating things we're watching, and we'll call this podcast when activist investors come to Salesforce, when activist investors come to your company. One of the things, if you've watched Billions, you've watched Succession, one of the least fun things is when somewhat hostile activist investors come to your company. This is what is essentially happening right now with Salesforce. Salesforce is a great company. I mean, literally iconic. It built the business of CRM, particularly CRM in a technology-driven way, past the old days of Rolodexes and having, paper notes. Salesforce really is the engineer of this and has ridden this thing incredibly well and built an incredible institution, and much, positivity to Mark Benioff. Salesforce recently has slumped a little bit. And in the slumping, one of the things that the activist investors see is they see a great company, and then they see an ability where the company has lost some of its strength. The stock price has gone down. Then they see a spot to sort of take a position in it. The most recent investors are the kinds of investors that no one really likes to have. Maybe an independent shareholder does, but the CEO and the main shareholders generally don't. Two of the investors that have come to town, Dan Loeb in Third Point, and then Elliott Management. These are companies that are generally known as activist shareholders that will try and push a company to make different changes in how the company does business. This is something that generally CEOs don't love. The Wall Street Journal wrote about this morning. Third Point's known for taking stakes and pushing for change at blue chip companies. Right now, people can't really tell exactly what the point is of Third Point's investments, but generally Third Point, Elliott Management, they're not like sharks in the water, but close, seeing blood in the water. They see an opportunity to invest at a lower price than the stock was valued at. They see possibly some strategic things they could do. They might push Mark Benioff for more layoffs. They might push for more streamlining. They might push him to take down some of his grandiose ambitions. But one of the things that makes great founders great is these grandiose ambitions. So it's fascinating to watch. But again, generally, independent shareholders, short-term, like the activist investors, engaged shareholders, active shareholders, like Mark Benioff, active leadership generally doesn't like the activist shareholders. This is a bad day when the activist shareholders come to town. It'll be fascinating to watch. On a similar note, Nelson Peltz recently took a big position. I think it was Nelson Peltz in Disney and Bob Iger. Bob Iger, in response to some of that, and you can only imagine the behind-the-scenes discussion between Iger and some of the activist investors, agreed to cut some jobs. It's cutting 7,000 jobs. It's looking for big cost cutting. But they've got some real problems, Disney. Their streaming business is slowing its growth. The parks business is not back where they really want it to be. But the activist investors, again, have come to town on Disney's reduction in stock price, and we'll see where that goes from there. But again, when activist investors come to town, when they come to Salesforce, no fun for the leaders of those companies. Thank you for listening to the Becker Business Minute, the Becker Private Equity Podcast. Thank you.